My name is Scott Macmillan. I'm the Managing Director of Invictus Energy Limited. Our ASX ticker is IVZ, and we're listed on the OTCQB with IVCTF. Invictus is an oil and gas explorer. We have a hugely exciting project in the north of Zimbabwe in the Cabora Bassa Basin, where we hold 3 license areas. We drilled the Makuyu-1 wildcat well last year and proved the presence of a working hydrocarbon system within the basin with the very first well, including the presence of light oil, gas condensate, as well as helium. We're now preparing to follow that up with the Makuyu-2 appraisal well, which will drill into a prominent horsed block in the central Makuyu structure. That is going to be spudding in Q3 2022, and we've got a potentially very transformative well coming up, which will prove up a very big discovery in Makuyu, as well as open up the rest of the running room in the basin that we have for our very large portfolio of follow-on prospects and leads.
Scott, good to see you. I haven't seen you for a year. A year yesterday, would you believe? So happy birthday. Right, we better, let's kind of get into some of the things that have been happening since we last saw you. I think it's a sort of tricky time, quite frankly. It looks like, you know, we're trading halts, technical issues, and I guess technical success, but not necessarily knocking it out of the park. What should we read into all of that?
Sure. So, look, frontier drilling, oil and gas is always very, very difficult. I think, you know, this is the first time it's ever been done in Zimbabwe. It was never going to be textbook, and there were always going to be some surprises, good and bad. So from a result perspective, Makuyu-1 was an outstanding result with what we've proven up with the very first one in the basin. We've got multiple gas-bearing reservoirs. We've got presence of light oil as well as helium. We did have some operational challenges, and really that was because of a couple of things. With the very first one in the basin, obviously we didn't have anything to go by in our well design and how we approached the actual drilling program. And so we had to be very conservative with the drilling parameters that we employed, the mud weight design, which we had to ensure from a safety point of view that was taken care of first. And we had to, you know, as I mentioned, be very conservative. So we were very overbalanced when we were drilling, a lot of solids in our mud, which caused us a lot of issues. And then we'd also had some a lot of tool failures, unfortunately, from our service provider that let us down at critical times, and we couldn't get a fluid sample to surface, which meant that from a formal reporting perspective, we couldn't declare a discovery from Makuyu-1. But nonetheless, we're still thrilled with the results and what we've got so far. Okay,
so if you don't mind, I just want to break that down a bit. Is it a case of heads have rolled as a result of this? I mean, are you still using the same service provider?
So we've retained our service provider for some of the services, which we got to work, by the end of the campaign. However, we have also brought in some additional service providers for some of the key and I think more critical parts of the well, namely wireline and mud logging, which were the 2 services that let us down the last time. So we've got SLB, formerly Schlumberger, in to do the wireline, and Geolog, who are mud logging specialists, coming in to do the mud logging. So we have made some changes there, and I think also some changes in the actual well design and drilling program as well. Now that we've got some calibration data from Makuyu-1, we're able to design a mud system and drilling fluid system that's more appropriate for the conditions that we're going to encounter now that we've learned from Makuyu-1.
Right, and what about internally? Learnings there,
yes.
Changes there?
Yeah, absolutely. So I think, in frontier regions, like we're operating in, this is a logistics project with some drilling in the middle of it. It's what we're doing drilling-wise is not that complicated. The logistics of getting everything and moving it in and out are quite hard. So there have been changes around there. I think also we've been able to approach this next campaign, being able to demand better commercial terms from some of our service providers as well. And we've brought in some new personnel to help with that, and also some additional personnel in the form of an exploration manager now that's come in to take away some of the technical aspects of the day-to-day business of the company away from me, which is good and bad. I do miss it, but he's far better at me than doing this stuff. So it frees me up to do the corporate stuff, unfortunately, Matt, which is also important.
Thanks for being here. I can hear the resentment in your voice. You'd rather be out there in the field. Quite right too. Look, okay, I guess drilling is tough. Things don't necessarily always go according to plan. There are bumps along the road, but I guess it's amplified somewhat in the sense that you're going quite deep, and each hole is there's a lot of money in each hole. If it's shallow. Drilling and lots of it, the odd failure doesn't not failure. Yeah. The odd technical difficulty, doesn't matter so much. But here, I guess that's the torchlight has shone on you somewhat. Should we look at the positives out of this? Okay, so some learnings in terms of we need some changes of personnel and service providers to make. To increase the chance of success on the next hole, Makuyu 2. But let's stick with Makuyu 1 for now. In terms of what you learnt about the field, what you've talked about light oils, condensate, even helium, which is great. But how does that inform the future drilling programs? Where targeting and depths and how you do it, etc.
Sure. So this was Makuyu 1 was the very first well drilled in the basin. So absolute rank wildcat. The nearest offset well that we had was 600 kilometers away in another country, in another basin. So, drilling the very first well in the basin is always tough. So what we learned from Makuyu 1, but pre-drill we had a lot of modeling that you do. You go and, try and hypothesize where the source rock is, where the reservoir, where the seals are, where the traps are, and that's all based on quite coarse data, mainly being seismic. So we've now got a calibration point in the basin with a well that we can calibrate back to the seismic. And the hypothesis that we have of where the source rock was, where the reservoirs are, and the seal, we've now proven that, and we did a pretty good job pre-drill and what turned out to be the actual result. So that's given us a lot of confidence now on being able to step Makuyu 2 is quite a big step out from Makuyu 1, about 6.8 kilometers, which is, is a large distance. But given what we've seen from Makuyu 1, we're confident in stepping out that distance and being able to, still see the correlation between Makuyu 1 and Makuyu 2, but also learn a lot more and being able to prove up a big discovery given the Makuyu 2 locations are about 400 meters up dip from Makuyu 1. So we've drilled it quite far south on the flank where Makuyu 1 is, and now going up dip a bit north of us, 400 meters, has the potential to prove up something that is very, very big.
Right, okay. But tell me a bit more about what you're seeing there. I think you talked in one of your presentations or press releases about 13 potential hydrocarbon bearing zones, significant gas columns, etc. And what you've kind of got to prove to the market is that the scale is there, that what you're hunting for is actually there, and you can get at it. So I'm more interested in what next. How do you actually sort of start to manage this field, understand this field, and ensure success from future drilling? Because, like I said, it's expensive drilling.
It is. So the plans for Makuyu 2 and where it's different from Makuyu 1, obviously we've got a much better calibration point. We're going to engineer some of these issues out of what we had in Makuyu 1. So one, a simpler trajectory. We're going to be drilling a near vertical well rather than a pretty deviated well, which we did in Makuyu 1, and that was to test all of those horizons on the way down. So in this block, we'll be able to do that more vertically and also test the lower Angwa, which is a target that we couldn't reach with the previous well. So that's some further potential upside. I think what the market is looking for is us to prove a discovery, and that means getting a fluid sample to surface and being able to get some pressure points so that we can prove up what the hydrocarbon column heights are, and you do that with your pressure gradient data. So that's all part and parcel of Makuyu 2. So I think once we can put those results out, then that'll give the market the direction that it needs, that this is something that's very material. Without what we couldn't get in Makuyu 1 because of the tool failures and also the wellbore conditions were those pressure points and fluid samples. So now having a much more tailored program and tools as well from Schlumberger for the wireline, that puts us in a good position to complete that. And once then looking forward, what we need to do, because this is a very, very big structure. Makuyu, it's 200 square kilometers under closure. And another reason why we're stepping out quite a long way, 6.8 kilometers, because if we drill a direct special just next door to Makuyu 1, that's not going to give us any new information. So it might prove up, we might be able to go back and get some fluid samples, but it's not going to give us any new information. That's really what we need to do, and characterize the basin as quickly. So we're confident of doing both now in this new location. So following up from that will be some 3D seismic, which is typically the process that's followed on shore. You're drilling of 2D first of all, and upon success, then you go and shoot 3D and take it from there, which will allow you to refine your future well targets a lot better, and then go and characterize the field.
Let's see where it's going to go, because you talk about like coarse data off the back of the 2D seismic and the 3D.
Mm-hmm.
If you don't mind sort of explaining to people why it's just a little bit more informative.
Sure. So with 2D data, our line spacing is about 1.7 kilometers apart, and you're just looking at a vertical cross section straight down from the surface into towards the basement or the core of the earth, if you imagine it that way. But you can only look at it at one line at a time and not look anywhere away from that data out in space. And so you've got typically a crisscross grid. If you go and look at our presentations on our website, you can see that, but you're only getting one tiny data point along one of those lines, whereas in 3D, it's literally a cube of data, and you can image anywhere within that cube, whereas we've only got coverage of maybe 0.5% or something if you take that data density of what you'd have versus 3D. And also having 3D data allows you to slice vertically through that data cube as well, which is also very useful when you've got multiple stacked reservoirs like we have, rather than just looking at it from a one-dimensional angle.
Okay, appreciate it. Now, if you look at something you referenced earlier was about the high mud weight, etc., and obviously you need to try and work out drilling fluid compositions and so forth. Has what you've learned added to the cost of the Makuyu 2 well? Your expectation of the cost for that? Have you had to change equipment to kind of cope with what you've been finding?
No, so I think if anything, it's reduced the cost of our wells because we don't have to gold plate everything. So it's it's been beneficial from that point of view, where we don't have to be as conservative and we can design something more appropriate. We don't have to have as much contingency as we were carrying for the first well, in terms of having everything under the sun at our disposal, because going back to what we were discussing earlier, in a remote location you can't mobilize anything quickly, and if you're sitting there in the middle of an operation and you need something, it is a disaster. You're on the clock, you're burning money from a rig and a service, a standby point of view, and also with your borehole open, the boreholes do start to deteriorate and break down after a certain point.
Right. Okay. And so can I assume that in terms of the well flow testing for Makuyu 1, that obviously perhaps hasn't quite gone according to plan. So in terms of how you're going to be able to kind of gauge Makuyu 2's success is going to be, obviously getting to some well flow testing and showing people that the numbers look good and the declines aren't, the declines are good, and all of those positive things. What are the things we should be looking to in terms of what success looks like from Makuyu 2? Because I kind of want to be able to judge you and say, like, here's our expectation, here's what we got, we're back on track again. Versus Makuyu 1 was like, we had an expectation of what we wanted to see, we didn't quite see everything we wanted, tool failures, etc. Whatever the reason, therefore, it hasn't, perhaps the market's been right to value as they have done. So what's going to change? What do we look for? How do we value you going forward? Sure.
In terms of data, we got everything that we needed apart from fluid samples. So we got a very high quality log suite of logs over Makuyu, all the primary logs we got, so we can characterize the reservoir and the fluids in it and what we see, so we can tell that there's gas in the sandstones. So what was missing from that were fluid samples and pressure gradients. So that's what we're coming to get in Makuyu 2, first of all. And so people are looking for, see how many intervals there are, what the pay zones are, and then we'll suspend it. So getting back to your testing question, we're not going to test it immediately, because to do that, we'd have to mobilize the test spread and equipment, and that will take a little bit of time. And also we need to design a well test appropriately. This is not, onshore Texas where you can just hook it up and start flowing it into pipelines. So we need to go away and design the test properly and get all that equipment mobilized. So that'll happen at some stage next year. And so we've got a two-part. I think for conventionals outside of the US, there's two means of getting formation fluid samples, which is your criteria to declare a discovery. And both of them are bringing fluids to the surface. One is with the wireline tools, which is what we're going to do in the first instance, and then we're going to come back and test it and float to surface. So there's two parts to that.
Okay. All of this costing money and taking time, and you kind of got to get that balance. You talk about, having more time to spend on corporate activities. One of those things is kind of getting a narrative out there that says, the plan is on track. Here's the timeline, etc. But all of that's going to take money. When we spoke last year, obviously money was good. I think you were in the market back in May this year. Where are you with capital at the moment?
Yeah, so we've so far this year for the program, which our phase 2 program. So we're also shooting some seismic in the eastern portion of our new license areas that have been awarded since we last spoke, and then for the wells. So we've raised 35 million this year for those. So that should cover us in terms of costs, and then based on success going forward for that, I think the market's been very, very receptive to Invictus and our story, and I don't foresee us having any issues in a success case being able to go back and fund well testing activity and 3D and future drilling and the like. And we've also got some interest from potential partners as well, and the timing of bringing those in, I think, will be right post success.
Right. Okay. Yeah, we talked about strategic partners back last year. Okay. So with the capital, you kind of, I guess I can always say this: if you're able to raise money and you're able to raise money cheaply, to a degree, not too worried about what's going on in the market or this dip in the market, but at the same time, there's an expectation from that money that you are going to be, getting things moving again. Because I think quite an erratic year last year with for you in terms of share price. This year has been sort of, January obviously saw you kind of fall off, halve the share price, and it's been sort of steady going since then up until recently. So obviously people perhaps leaning in and listening to what you're doing at the moment. I mean, how are you kind of gauging the market's reaction to this? Or like as I said at the beginning, because you kind of got the capital backing up your operational plans or your field plans, does it not really matter at this point?
Yeah, I don't think it really matters. And like we see with a lot of explorers that are chasing pretty material targets, I think there's been, that drop in January was when we had to basically cease operations. We had all those tool failures and they didn't have any backups, and we had to stop. And we also needed to bring things to a stop, because you can go and chase things for so long, and someone's got to be an adult and say, enough's enough. We've got to bring someone else in to do this and reassess. So we did that in January, and that's where you saw that drop, and that was disappointing to have to bring things, because we were closer. We should have got there, and that was, I think, the most disappointing thing for the company and personally as well. Everyone had done a tremendous job to get to that point, and as I said, to do this with the first well would have been absolutely incredible. You don't very, very hardly ever see that sort of success with the first well.
Statistically, it was always going to be tough. But what I want to get out of this, Scott, if you don't mind, because it's kind of like you saw you've seen great heights at various moments along this journey of yours, and I think to some degree it's what's happened is fairly normal in this space. For us, those of us who've been in oil and gas for a long time, we understand that. But what's it going to take to kind of get back up there? Makuyu 2 is obviously going to be a big part of it, and that's why I'm asking you precisely what your hopes and expectations are of that, and why people should, I guess, give you the credit for the operations on the ground and
sure the
opportunity that you're chasing.
Yeah. So I think you're now starting to see interest coming back into the stock because things are moving. We've, the well pad's just about done. We'll be moving the rig in a few weeks, and operations will be starting, and we'll spud this quarter. And so that interest is naturally going to come back in. And I think from looking at where we were last year pre-drill, with all the risk going into an undrilled basin, that's statistically it was very hard and it was a long shot actually finding anything. Now with Mukuyu 1, we have found something, and I think with Mukuyu 2, that risk is vastly reduced going into this next well. So our chances of success and the risk versus reward here are much better than they were for Mukuyu 1.
Right, but what I'm trying to get at is trying to understand, what does success look like? Because if you're not float testing till next year, those float tests can, those are the sorts of data and stats that people can sort of wrap their head around, right?
Yeah.
But if you're not doing that till next year, what are you doing? And give me something to look at and say, I can judge you by this.
Yeah, so it would obviously be the declaration of discovery, which would come from fluid sampling, and that's pretty typical for conventional wells. So Venus, for example, which was discovered in Namibia, they didn't flow test it until this year. So flow testing for conventional operations with spreads generally happens after drilling, when you can mobilize all that gear. You're going in. Your primary means of evaluating this is with your wireline,
right? With
your wireline data, not the actual. The testing will help underpin the flow rates and the deliverability and the commerciality, not whether there is oil or gas there. That we'll be able to determine from those logs, which we could in Mukuyu 1, but we just couldn't get a fluid sample.
Right. Okay. And again, I just want to be clear on this for people, because if we in mining context, there's lots of companies declare discoveries, and there's a wide range of definitions as to what the heck that means.
Yeah.
For you, be really clear with this. Discovery to you means what? You're going to make an official declaration. It'll move your share price, but will it be accurate? So give me that.
Yes, so what it will be accurate, because we would have recovered fluid samples from the reservoirs with the wireline tools back to surface, which is what you need to do. So you can physically pull those samples out of the rock, which proves that it can flow. So
right, okay. So that's what we're looking for when you make that announcement. Okay. Well, we'll sit back and wait and see what happens with that. Can we talk about the management and allocation of capital, please? Because obviously Mukuyu 1. Clearly, you're putting your focus on that. Mukuyu 1, there's still some costs associated with that in terms of maintenance of that hole. And I'm interested in the rest of the portfolio, the third, the fourth, the fifth targets in terms of your timing around that, allocation of resources, capital now on that, and how quickly do you burn through this balance sheet of yours? Sure.
So from an allocation point of view, and we've been prepping our budgets for, it's just gone into financial year here in Australia. 96% of our funding goes to activity, seismic, drilling. We've got a very lean and mean team, but the majority of our costs are actually focused on going in the ground, which is what I think people want to see. So part of that has been allocating some to our seismic infill campaign, and that is to the east of our new license area in EPO 1848 and 1849. So that is to mature some very interesting leads that we see that are amplitude supported, which are on trend with Mukuyu. They've got some very nice flat spots in there, which we think are indicative of hydrocarbons present. And now we know that the basin works, and that theory is held up so far. So those are getting matured now, and will be drill ready probably early next year. So those will get lumped in a future drilling campaign at some stage. So that's in the central fairway play. We've got two play types. We've got that and the basin margin play, which is more akin to your East Africa Rift system, and the successes that we've seen in places like Uganda and Kenya, which were prolific multi-billion barrel discoveries. So we've got those two play types. We haven't tested the basin margin play yet either. We've got 5 drill ready prospects there with about 1.2 billion barrels of potential oil recoverable there, and then a further 2 or 3 that will be matured to drill ready as well and add to that prospect inventory. So beyond the Makuyu 2 campaign and the seismic, obviously that will require some additional funding. But as we said, we're confident of delivering on Makuyu 2, and we think then a number of options will open up for us, whether it's through the market, whether it's through partnering to help fund our future activity.
Right. So give me the timing of that one. When are we looking for news?
So we'll have results in Q4. So we're spudding in Q3, and 50 to 60 day well from Makuyu 2, so it won't be long.
Okay. We'll look out for that. Talk to me about doing business in Zimbabwe. Obviously, we've talked a few times in the past about this. The government's approach to this. Obviously, there's a production sharing agreement that's on the table at the moment. Obviously, we're hearing that the government is keen on foreign direct investment programs. So how are you finding things? As expected?
Look, it has been very good, and they've been very supportive. And I think through the drilling campaign last year, they were very keen to see us succeed. I think they recognise that this is a potential silver bullet for the economy in many ways. So they've been very supportive of us. Helped us with the import of equipment, with duty-free rebates and tax-free imports, which, those sort of things can add quite a lot of money onto your program. So that's helped us in that respect. The production sharing agreement is progressing. We've agreed the terms. It's now just awaiting execution from the various line ministries that are involved. And once, so we're not too fussed on that. It will come. And once that happens, I think people will see that we've got very good fiscal terms in place that are commensurate with others in the region, like Namibia and South Africa, where you've got some good fiscal regimes in place, which makes sure that the country benefits, but also that the investors who are taking the risk benefit from any discovered and developed resources. So, okay,
coming back to the strategic investor conversation which we had last time, and you mentioned already in this conversation, are there conversations going on? Clearly, you're going to need to demonstrate to them as well as the market, success with Makuyu 2 and beyond. But when they're sort of looking into the kind of the geopolitical scene around you, we talked about the need in country for gas, exporting to the countries around you. Southern Africa and South Africa is experiencing all sorts of issues around power outages, and it's getting tough down there. So the environment for gas is positive. I think you'd agree.
Yeah, it's hugely positive, and I think it's only strengthened since we last spoke. We've had some additional domestic developments within Zimbabwe. There's a huge brand new stainless steel plant that's being built there by Dinsan. And that is going to require 2,000 megawatts of power, which is quite a lot of gas to monetize. And, they've got some big resources behind them. You're looking at some of the platinum miners now wanting to build a refinery and need gas to fund that. Those are, blue chips, household names, Anglo-American. Zimplat, certainly in Zim, have got part of Implats who've got a very, very good operation there, and done very, very well over the last 20 years in the country and looking to expand. So I think that's also a mark of, how the investment environment has changed when existing investors there are reinvesting in the country and a jurisdiction that they know well. So the gas demand has bolstered. And then, of course, we've seen further south of Zimbabwe and South Africa, that demand has only grown more urgent. And with the Southern Africa power pool, we can monetize gas anywhere in the region and export it by wire without having to build, big pipelines. So that we've got a key advantage. I think everyone, when I first started, I think onshore landlocked gas was quite a hard sell conceptually, which understandably at first glance, but once you take people through what our monetization options are, and it doesn't matter how much gas we discover, we'll be able to sell it. I think people are really surprised, but also excited at the opportunity, because it is material and something that we can get done fairly quickly. There's a hungry market there, and something that often when you find gas, you've got to wait for the market to develop before you can monetize it, whereas this is the other way around. We've got people screaming at us.
Yeah, it's interesting. We're seeing it in Europe as well. This whole energy transition discussion, which has come up since Russia-Ukraine situation, we can amplify that's in Europe, down Africa in terms of that local requirement as well. We're down in South Africa at the beginning of the year, load shedding 4 times a day. It's something not quite right down there. Okay, well, look, Scott, I appreciate the update. I mean, don't leave it so long until we see you next time. Sounds like if you're spudding soon, come back on and tell us how you get on. Okay.
Absolutely. Look forward to it.